Good morning to you all, and welcome to the 94th MPC press conference. As we always do, the Governor and Chairman of the Monetary Policy Committee would present a statement, and then you have the opportunity to ask questions. You would have to identify yourselves as we usually do. This is being streamed live on Facebook to give the benefit of this meeting to other journalists, but they won't have the opportunity to ask questions. You would have to represent them. Thank you.
Okay, thank you very much, AC. Good morning, ladies and gentlemen. The COVID-19 pandemic has disrupted economic activity, created uncertainty, and weakened global growth conditions. Countries have imposed restrictions and social distancing measures, and in some cases, lockdowns to slow down the spread of the virus. These measures have come at a cost to the global economy, forcing fiscal and monetary authorities to implement unprecedented policy measures to deal with the economic fallout. For instance, the US Fed cut its policy rate by 150 basis points to a range of 0 to 0.25% in March 2020 and made $1.5 trillion available for short-term interbank lending, among other liquidity measures. The U.S. Treasury has also introduced various stimulus initiatives to support health institutions, frontline health workers, households, and businesses. Finally, multilateral institutions like the IMF and World Bank and the G20 have also introduced loans and debt initiatives to support vulnerable countries in their fight against the COVID-19 pandemic. In addition to the weak growth prospects, the inability of OPEC Plus to agree on production cuts led to the collapse of oil prices, further sending shockwaves across financial markets. Events related to the spread of the pandemic and its impact are still evolving, and the heightened uncertainty has added to the challenge of assessing the overall economic impact. Notwithstanding the unfavorable global developments, the performance of Ghana's external sector has been strong in the first quarter of 2020, reflecting in the higher trade surplus and higher capital inflows. The trade balance recorded a surplus of $936.4 million compared with a surplus of $642.4 million recorded for the same period in 2019. This outturn was lower on account of lower imports and a marginal fall in export receipts. The lower oil import value is primarily as a result of a switch in the energy generation mix in favor of domestically produced gas. Demand for non-oil imports also dropped in line with a slowdown in economic activity. The government of Ghana's decision to access the Eurobond market earlier in the year and the rapid credit facility financing from the IMF resulted in a build-up in reserves of $1.5 billion. Gross international reserves therefore increased from a level of $8.4 billion at the end of December 2019 to $10.3 billion at the end of April 2020, sufficient to provide 4.8 months of import cover. This strong reserve position has helped to ensure stability in the foreign exchange market, even as external financing conditions tighten and the emerging and frontier economies see capital outflow reversals as a result of the heightened global uncertainty. To further boost foreign exchange liquidity, the Bank of Ghana has concluded a $1 billion repurchase agreement repo facility with the U.S. Federal Reserve under its repo facility for foreign and international monetary authorities, the FEMA repo facility. This facility is expected to be available at least for 6 months and provides an important foreign exchange buffer to boost dollar liquidity amid the COVID-19 global pandemic and will further enhance the Bank of Ghana's dollar liquidity. Leading indicators of economic activity during the first quarter of the year suggest some slowdown, reflecting the restrictions, social distancing, and partial lockdown measures introduced by the government in the middle of March. Retail sales picked up in March 2020 due to the panic buying which preceded the partial lockdown, while consumption, proxied by domestic VAT receipts, dipped. The slow conditions in economic activity is reflected in port activities and a sharp decline in tourist arrivals. The slowdown also affected the private sector's contributions to social security. As a result of these developments, the Bank of Ghana's composite index of economic activity contracted by 2.2% in March 2020 compared to a growth of 5.6% for the corresponding period of 2019. Preliminary estimates by the Bank of Ghana shows that growth in 2020 is likely to be between 2 and 2.5%. Provisional data for the first quarter on the execution of the budget show a widening of the deficit relative to what was observed for the same period in 2019. As at the end of the first quarter, a deficit equivalent to 3.4% of GDP has been recorded compared with a deficit target of 1.04% of GDP. The larger deficit is explained by shortfalls in tax revenues on the back of shortfalls in international trade taxes, taxes on goods and services, and taxes on income and property in response to unfavorable external and domestic conditions and a higher pace of spending, which included some unbudgeted COVID-related expenditure. The expanded deficit led to an increase in the debt stock to 59.3% of GDP at the end of March 2020. The lockdown resulted in a decline in currency as consumers resorted to the use of electronic modes of payment. General economic uncertainty reduced demand for credit as commercial banks tightened their credit stance. As a result, credit to the private sector remained virtually flat during the period. Broad money supply slowed significantly to 13.5% in March 2020 compared with 21.6% a year ago. The latest stress test conducted in April 2020 suggests that banks are strong and resilient and are well positioned to withstand mild to moderate liquidity and credit shocks on the basis of strong capital buffers and high liquidity positions. Capital adequacy ratio is well above the revised regulatory floor of 11.5%. However, the industry's NPL ratio has inched up during the quarter, reflecting the emerging impact of the pandemic on low credit growth and higher provisioning. So far, banks are also responding positively to the recently announced policy initiatives to support the economy by reducing lending rates and supporting credit growth, as well as offering moratoriums on loan repayments to cushion customers. After remaining flat at 7.8% for 3 consecutive readings, January to March 2020, headline inflation jumped up in April to 10.6%, outside the bank's inflation target band. The sharp rise in inflation is attributed to increased demand for food items, stemming from the 2 panic buying episodes preceding the market fumigation exercises across the country and the partial lockdown in both Accra and Kumasi, the two largest cities. This led to the exaggerated food prices in April. Food and non-alcoholic beverages prices rose to 14.4%, significantly higher than the 8.4% recorded in March 2020. Non-food inflation increased to 7.7% in April 2020 from 7.5% in March 2020. The bank's latest forecast points to elevated risks to the inflation outlook in the forecast horizon, underscored by the recent jump in headline inflation. On the downside, relief measures on water and electricity tariffs and declining crude oil prices are likely to ease price pressures in the outlook. The recent rise in inflation is projected to peak in the second quarter and begin to return to the disinflation path in subsequent quarters, with inflation settling within the medium-term target band by the end of the year. On the growth outlook, baseline projections show a sharp downturn in GDP growth, with the economy operating below capacity in the medium term. Under the circumstances, and given the balance of risks to inflation and growth, the committee decided to keep the policy rate unchanged at 14.5%. Additional measures. The COVID-19 pandemic has put a severe strain on the budget, manifesting in petroleum revenue shortfalls as a result of plunging crude oil prices and shortfalls in import duties, other tax revenues, and non-tax revenues. Preliminary assessment shows that the financing gap that was estimated at the time of applying for the IMF RCF in March has widened significantly, resulting in a large residual financing gap. Current market conditions in the wake of the pandemic will not allow the financing of the gap from the domestic capital markets without significantly increasing interest rates. Under the circumstances and in line with Section 30 of the Bank of Ghana Act 2002, Act 612 as amended, the Bank of Ghana has triggered the emergency financing provisions, which permits the bank to increase the limit of Bank of Ghana's purchases of government securities in the event of any emergency to help finance the residual financing gap. Today, under the Banks of Ghana's Asset Purchase Program, the bank has purchased a Government of Ghana COVID-19 relief bond with a face value of 5.5 billion cedis at the monetary policy rate with a 10-year tenor and a moratorium of 2 years, principal and interest. The bank stands ready to continue with its asset purchase program up to 10 billion cedis in line with the current estimates of the financing gap from the COVID-19 pandemic. The SDI sector has played a key role in extending access to financial services to small households and businesses. Such customers are at high risk of being disproportionately impacted on by the pandemic, either because they have lost their livelihoods in the informal or micro and small business sector, or they have lost their jobs. At the same time, SDIs are much smaller in size and balance sheets compared to the banks, and are themselves being impacted by the pandemic. To further provide economic relief to households and businesses, and to increase credit to the key sectors of the economy, the Bank of Ghana announces the following additional measures. First, activate Section 46A of the Bank of Ghana Act 2002, that is Act 612 as amended, to provide liquidity support to savings and loans and finance house companies facing temporary liquidity challenges. Eligibility for this facility and the terms and conditions upon which it will be granted will be based strictly on the provisions of Section 46A and the Bank of Ghana's updated liquidity support policy framework. The bank would also strengthen the capacity of the ARB Apex Bank to provide liquidity support for rural and community banks facing temporary liquidity challenges in line with the framework to be agreed. Microfinance companies who meet eligibility criteria agreed will also qualify for this support from the ARB Apex Bank. The bank has also extended the deadline for SDIs, that is, microfinance institutions and rural and community banks, to meet the new capital requirements to December 2021. This is expected to provide temporary relief to SDIs given current economic conditions. The bank has also reduced the 8% primary reserve ratio for savings and loans companies, finance house companies, and rural and community banks to 6%, and the 10% primary reserve ratio for microfinance companies has been reduced to 8%. These measures are designed to release liquidity to the SDI sector to enable them to support their customers and ensure that the MSE sector and low-income households do not lose access to critical financial service in these uncertain times. The bank will provide guidance to banks and SDIs on the accounting treatment of loan restructuring, classifications, provisioning, and expected credit losses, and prudential assessments of credit risk and capital ratios. Such guidance will help banks and SDIs make quicker decisions on customer loan requests for loan restructuring. The Bank of Ghana expects fair and equitable treatment of all customers of banks and SDIs, especially at this time. The bank will monitor strict business conduct rules for banks and SDIs in their dealings with customers, particularly in relation to transparency and fairness in revisions to loan terms and conditions, fee charges, and related issues. Overall, the SDI sector will be well positioned to participate in the post-pandemic economic recovery, and the bank will continue to monitor developments and take additional decisions as may be necessary. Thank you.
Thank you very much. I think he deserves a round of applause. That's all we do. Thank you. So it's question time. For those who are sitting behind, just come to a microphone when you need to answer, ask any questions. Okay, Obed. Please come. Yeah, so use one that is not in front of anybody. No, to ask the question and go back. That's fine.
Good morning, Governor. You mentioned the assets purchase program. I'm not so much sure whether it is different from the central bank's financing of government budget. So please, can you explain, is it different or is it equal to, and has there been conversations about central bank's financing of government budget?
Okay, thank you. George. Okay.
George Affair, Joy FM. I wanted to find out what are the post-policy measures monitoring on the market. Maybe it's not now, but about 2 or 3 weeks ago, I engaged some businesses who had some facilities with the banks, and they were still saying that nothing has changed in terms of these banks reviewing their conditions surrounding facilities that they have. And it appears that at the Bank of Ghana level, even though there have been several measures taken, when you get to the ground, even though the banks have done the necessary PRs and the press releases, it has not reflected in terms of their loan facility and cost of credit and all those things. So I wanted to find out the banking supervision and financial stability and all those things. How is your market surveillance to try and test what is on the market to ensure that if the banks claim that they are responding to a policy initiative, indeed they are doing it. And also, Governor, I wanted to find out that how strong are your buffers, because you give us an understanding that you stand ready to come in. In your last statement before this meeting, you warned that, yeah, there are still some shocks for the sector, but I get the understanding here that everything is safe. How strong are your absorbers to absorb any shocks? Because the World Bank is saying that we might go into a recession. You're looking at 2 to 2.5. How strong is the BOG to support us when it matters if things should get out of hand? Some have said that as long as we don't get a vaccine, we should forget about things stabilizing anytime soon.
Yeah, my name is Lawrence Egbefia, CTFM. So one of the measures that was taken by the central bank is to suspend dividend payment. Some people have said that coming from a financial crisis where the same action was taken, and comparing 2019 where some of the banks had fairly stable operations, wouldn't it have been prudent if the central bank have identified some banks that did well and then allowed them to pay dividend?
Well, let me start with the last question, really, to respond that all the measures that we put into place are in the interest of depositors, as well as in the longer term, the interest of the investors themselves, because you also what happens when banks are undercapitalized and have liquidity issues is the depositors who fail to get access to their deposits in the banks. So we are trying to be risk averse and in a sense to protect depositors so that the banks will be careful about how they dissipate, earnings. And all that we are saying is that we can see the evolution of, weaker economic conditions, which means in the outlook one can expect that credit impairments would go up. One can expect that the banks will face a more challenging environment, and all of that will translate into non-performing loans. And therefore, it's important that we conserve the liquidity and the capital that the banks have at this time. So if you think about it, in the long run, it's in the interest of the shareholders themselves that the institutions will be stronger even after the end of this pandemic. Now, the question from Joy FM, I think it's a little, I'm not sure what the issue is. You're, in a sense, asking about the buffers of the banks, which is also related to what I just said, that we are going through this problem at a time that we have just completed a reform of the banking sector. We have strengthened their capital positions. And therefore, the banks are in a much stronger position to manage the developments that have taken place. Nevertheless, we are beginning to see emerging signs of weakness. Profits are going down, their operational costs are going up, the net interest income for banks are beginning to decline. So these are all warning signs in terms of the outlook. But overall, we think that they have the buffers. They have the capital buffers and they have the liquidity buffers to handle this pandemic. Obviously, if things turn out to be much worse than currently projected, you would have a weaker banking sector. But for now, the current projections do not suggest that things would revert back to where we started. This is really the point. And then you raise the issue about, I think, the economy, the buffers of the Ghanaian economy, and the growth projections, because this is really the work that has been done internally from the Bank of Ghana, looking at the developments, and on the basis of the projections that have been done from the World Economic outlook. If you look at the projections for global growth, you are looking at a 3% decline in global growth. Just looking at the statistical relationship between the growth of the Ghanaian economy and global growth, we have been able to draw some, inferences. And one of those inferences is what we are telling you, that we think the Ghanaian economy will grow between 2% and 2.5%. Now, these things are still developing. If things get worse than they currently are, these projections will change. So it's a situation which is still evolving. But for now, these are the projections that our technical people were able to put together. And then you asked the question about whether the banks were implementing the policy measures that were announced in the last MPC. To the best of our knowledge, they are. And we have been meeting with the chief executives of the banks. The last time we met was on a week today. They gave us updates on where they are. Many of their clients, customers of the banks, have gone to restructure facilities. Loan maturities have been extended for quite a number of customers. I think the data is there. I think over 3,000 or more bank customers have had their loans restructured. Some even reported that some customers were thinking that it was a forgiveness. But the issue is not about loan forgiveness. The issue is about restructuring. Instead of paying the loan in maybe 6 months or 1 year, they are renegotiating to extend these loans to a year or two. This is really what has happened. And to the best of my knowledge, this is working. The banks have given us that feedback. The first question on the asset purchase program. Yes, I mean, you have to look at it in terms of the central bank's interventions in the economy. And we are saying that for some time now, it hasn't been necessary for the central bank to purchase any of those securities at the primary level. But given the conditions due to the pandemic, we think this is the time for the central bank to also provide the appropriate liquidity. And it is part of the asset purchase program, which we have pegged at 10 billion for the year. Yes, it is just a way of financing, yes.
Now, different from what the IMF, we discontinued when we were having the IMF program.
Let me help you. Yes, let me help you. We signed a memorandum of understanding during the IMF program that we were not going to finance the budget through whichever method, whether it's an asset purchase program or some other, overdraft or some other, window. But for now, we are more or less suspending that memorandum of understanding, which would have expired at the end of 2020 anyway, right? So we are suspending that memorandum of understanding so that we'll be able to participate in the debt market.
Hello, my name is Etonam. I represent TV3. My first question is, you said that you're providing liquidity support to savings and loans and finance houses as well as microfinance institutions. I want to know what the challenge of these finance houses are. What have they communicated to you that is warranting a liquidity support. If you can paint a picture for us. I want to know what the budget is for financing these institutions. How much are we allocating for the support? I want to know what the source is. Is it going to be from the 5.5 billion cedis you mentioned earlier? I also want to know when this is starting, when the support is starting. And then my second question will be, we heard from MBSSI that they're going to meet with the Bank of Ghana to agree on some form of interest with regards to 600 million cedis allocation for SMEs. Have you had that meeting yet? And what is the interest we are looking at? I'll be grateful if you can finish me with that. Thank you.
Good morning. My name is Dorothy Ajimai, and I work with GTV. I want to find out, why did it take the central bank a while before setting up the FinTech and Innovation Office? And also, is Ghana ready to join the League of Nations that are seeking to introduce digital currency? If there's any plan of the sort, how soon? And also, kindly give us the progress reports from the receiver of microfinance about the number of people who have been paid their monies. Thank you.
Governor, Andre van Vuren from Bloomberg News. Just to get clarity on the bond purchase, when you mention it's at the monetary policy rate, just want to confirm that's not necessarily always the current monetary policy rate. That's a flexible rate, depending on how the bank's rate move. And then also we have seen quite a substantial increase in the participation of local banks in the government's local bond sales. We assume they've been to some extent enabled to do so by some of the liquidity measures that you announced in March. Is that of a concern to you, or will you let the banks be? Thanks.
Thank you. Suleiman Mustafa, Graphic. Governor, we've seen some fluctuations in the FX market lately, despite the fact that you have very strong buffers, to boost your currency. How often do you normally intervene in the FX market? My second question, apart from what Etonam asked about the total amount that you are giving to the SDIs, you've given us some, you've mentioned that you have to meet some requirements. If you can give us what requirements there are. And then maybe lastly, on the flip side, at the last annual meetings, you were elected chairman of the board of governors of the IMF and World Bank. On that front, there have been some silence. I want to know what are some of the activities you've been engaged in. Thank you.
I did some notes down, but I forgot to just draw your attention. I want to find out what's the stage of your plans in is it the gold accumulation? Are you still doing it, or you've put it aside because of this? I also wanted to find out the impact of the Eurobond inflow on the capital and the financial account, because if you look at the numbers, we are not seeing. I'm starting to be educated as in the inflow impacting on these accounts. So I wanted some clarity on that one, please.
No, let me deal with just last one. I thought, on the contrary, the numbers are showing the flows in the first quarter of this year. The net international reserves increased by 1.5 billion. So the numbers are showing that we have increased our reserves during this period. Now, to start with the question from Bloomberg, you're absolutely right. The monetary policy rate is the price at which that bond, was pegged at, and the reason is that monetary policy rate is to allow for flexibility. It's a 10-year instrument, so over this period, the monetary policy rate will not be the same. So depending on where the rate is. Currently, the rate is at 14.5%. Your second observation was the increased participation of the commercial banks in the bond market, which we have also been monitoring and have noticed that there was some uptake in that. You would recollect that when we announced the policy measures, we were quite clear that we did not want the banks to, use the resources that had been released to invest in government paper, and instead we expected them to increase their credit intermediation. Obviously, the banks argued the last time we met them, which was a week today, that that sort of activity will take time. They need to go through their credit approval processes. They need to make their own assessments of credit worthiness before they can lend. So we need to watch that space very closely to ensure that over time the resources that were released would go into actual lending to the economy and not just investments in government paper. Now, to GTV's questions on fluctuations in the foreign exchange market, that should be expected because we have a flexible and a market-determined exchange rate. So you would expect that the CD would not remain at one rate for a very long time because of the dynamics of supply and demand. If you look at what has happened in almost all the frontier markets, look at South Africa, you look at Kenya, you look at even Zambia, over the first quarter of 2020, most of these frontier markets have seen very sharp depreciations of their currencies in response to the developments at the global front. And the Ghana CD is the only currency which has been relatively stable and in fact appreciated over the period till the last few weeks where we have seen some of it, some of that appreciation taken off because of the depreciation. The reason why the CD has been able to perform that way is because we went to the market very early on in the year to do that Eurobond, which, has in a sense helped us before this global pandemic took off. And then your next question was on the total amount of the SDI liquidity support plan. We have not put a figure to it yet. I mean, we are still assessing the need for that demand, but just to say that we are ready to provide that support to the institutions in that segment of the financial sector. The eligibility requirements are very obvious. They have to be banks that are well managed. They have to be they have to be savings and loans and finance houses that are well managed, that have good governance arrangements, and that are solvent. We are not going to be working with institutions that are insolvent. So those are the requirements. And then this is not free money. This is really lending. A liquidity support is not free money. It's lending. And therefore, you have to be able to give us the appropriate collateral in order for us to extend the liquidity to you. So those are the conditions. In terms of the Board of Governors of the Washington institutions, as you know, the annual meetings will be in October. We are still not sure whether it will even be virtual form or whether they will be gathering in Washington, as has been done in the past. But we are working towards the annual meetings. On Monday, we'll be having what we call the Joint Committee on Remuneration meeting. This is a meeting that will take place virtually, and we are just going to be discussing remuneration of executive directors of the IMF and the World Bank and trying to set the salaries for 2020. That's one of the discussions that I have to do on Monday by virtual means. And you'll be surprised to hear that we are discussing a cost of living allowance for the year of about 1.9%. That's the type of wage adjustments that you do in Washington, right? In Ghana, we're used to big wage adjustments. And this is really what the Board of Governors, work entails. And hopefully and we have 3 meetings to conclude on this matter before the annual meeting in October. And by then, we would have completed the work on remuneration for the executive directors of those 2 institutions. The gold acquisition program is still on, and I believe that we are nearly there to commence buying. We still think that this is a good time for us to go into the market to, increase the gold reserve holdings of the Bank of Ghana. And the board of Bank of Ghana, I think, will be meeting next week to take a final decision on that initiative. Etanam asked so many questions. I don't know where to start from. 4 or 5 questions. From City TV, City FM, right? From TV3, I don't know where to start from. There are so many questions. NBSSI, yes, we met with the lady, yes, Kosi, last week on that. As you know, the government has a 600 million facility for small businesses, which NBSSI would be more or less administering. So we had a good meeting, even on the possibility of using the rural banks and the microfinance institutions to facilitate the administration of that particular facility. Then as I said, the amount for the SDI liquidity support is not yet determined. We are still looking at it. And we would be doing this almost as soon as possible in terms of the timing. As to what are the challenges for the SDIs, let me start with the rural banks. As you know, we did not have any major reform of the rural banking sector. So all the challenges that we saw in the banking system, which we more or less dealt with in that exercise, you'd find those kinds of problems in the rural banking sector. Yeah. So I think I've dealt with almost. Oh, for the NBSSI issue, well, that interest is not ours to determine because it's a government fund package, right? So I think that is going to be determined by the government. Well, we met with her to discuss issues of credit administration and how to efficiently, disseminate those resources to small and micro institutions. This is really to the granular level, and she had talked about how the rural banking system was spread all over the country, and you had microfinance institutions also spread all over the country, which would help facilitate the type of work that she's trying to undertake. But the pricing was not for the Bank of Ghana to discuss. Is there anybody that I've missed? Well, I think we announced this again last Monetary Policy Committee about the Bank of Ghana starting a pilot on this digital currency issue. And the pilot hasn't yet taken off, but we think that it's an idea whose time has come. As you know, Ghana is already very advanced in terms of the use of mobile money. Mobile money is in itself a form of digital currency. And you see that Ghana Commercial Bank has introduced what they call G-Money. At the moment, G-Money is 100% backed by currency or deposits at the Ghana Commercial Bank. Now, if we have to introduce an ECD, that would be a central bank electronic money, right? That would have to be issued from the central bank. And that makes it different from mobile money and G-Money, which are backed by bank deposits. So the plan is to continue with our, our arrangements to have the pilot, started. This is an idea, as you heard, even the Chinese have introduced the renminbi, an electronic version of the renminbi, the digital renminbi. So we would also pursue, our pilot program, hopefully very soon. Receivership payments, the numbers that we have, as you know, over 5 billion has been paid to depositors. 2 billion of that was in cash, and then the rest were in bonds, a 5-year bond to be amortized over 5 years. This is the information on the receivership for the collapsed savings and loans and micro institutions. In terms of the number of customers, over 318,000 customers have been paid under that receivership. Over 2,000 people have benefited from the cash payments, and over 4,000 customers have also benefited from payments in bonds. Okay.
This one says, in February 2020, government did a $3 billion Eurobond for liability management, but looking at the capital and financial accounts balance, the recorded Bank of Ghana recorded about $1.4 billion in March 2020. Over the same period, we also see a slight decline in the gross reserves position. So what explains this muted impact of the Eurobond inflow on the capital and financial account balance and the gross reserves position? The second one says, and the last one, historically, we noticed a substantial difference between the gross reserves and the net reserve. Currently, the difference is about $4 billion. Apart from the petroleum funds, which holds $727 million, what makes up the seemingly illiquid portion of the gross reserves, and at what stage is the Bank of Ghana with its plans to start accumulating gold reserves by mid-year?
I'll just sum up, and I got a question from a colleague journalist asking that you said there's been a rise in the e-payment because of the COVID-19. If you can give us the percentage rise or the actuals. And then the last one is about the pricing of the stimulus. Since you said it's not free money, though you've not yet determined how much total you are giving, have you determined the pricing of it? Thank you.
Okay, good. So let me deal with Daily Graphics questions. These are the last ones. On the pricing of the liquidity support for SDIs, remember the Bank of Ghana has a policy rate. So that's the pricing at 14.5. And yes, 14.5 would normally be the base, yes. And then on the e-payments, yes, we have seen a significant rise in e-payments. The number was about 170 million, I read before coming here. 170, okay. So we'll let you have the numbers after this meeting. Then back to Etonam again, yes, and your very good analysis. Is she here? Because I thought she put it very well. What accounts for the muted impact of the large foreign exchange flows that we have seen in the first quarter of the year, which I think it's a good statement, because we are not isolated from what is happening in the global environment. First, the 3 billion euro bond, as she said, some of it was used for liability management. So I think almost $1 billion was used to pay off existing liabilities or sovereign bond liabilities, which would make the net inflow from the euro bond, I think, was about 2.6 billion or so. 600 for liabilities. Okay, so that brings the net to around 2.45 net inflow from that euro bond. And $1 billion of that was for energy sector also, which more or less, would also, in a sense, be, what's the word? I'm trying to find a word for that. It's part of the netting arrangement. It's not immediately available for use. So over the period, I think we've also paid back significant amounts in terms of capital outflows, right? Bond payments, maturing instruments, both on the domestic side and through the external maturities also. And that would account for why you are not seeing a savings of 3 billion. To put it simply, the fact that you've received 3 billion does not mean that you'll be able to save 3 billion over the same period. I think that the fact that we have saved 1.5 billion is a good effort for given the conditions under which we find ourselves globally. And then the other question, I think it's about the net and the gross. There's discussions going on gross reserves and net international reserves. And part of that is explained by swap arrangements that the Bank of Ghana has with other financial institutions. And those are liabilities for the central bank, and that's why you have that difference between the gross numbers and the net international reserves. So to put it plainly, we have 4 billion of foreign liabilities also to take care of.